there everyone, a very good morning and welcome to Buy Now Sell Now. I'm Avan Dabash and with me in our studios is Karunya Ran. Today it's Friday, it's our sector special, and as promised, today we'll be focusing full throttle on the banking sector. What should you do with your individual stocks? Is it a good time to nibble into PSBs? Are private banks a safer bet? We'll get all those queries answered. Well, first up, let's look at the markets. 10,305, quiet as ever as we speak. Let's get you the top headlines. It's Lupin, which is on fire as the Pithampur Unit 1 facility gets an EIR from the US FDA. Under pressure for that stock.
Another stock that's buzzing away in trade is RCom. SC has allowed Spectrum and Realty sale to Jio to pay the debt. So watch out for that one in trade.
Meantime, check in on SOBA as CLSA bets on the company's pre-sale numbers for the fourth quarter. They've come in, by the way, at a 20-year high. CLSA believes that the FY19 pre-sales target will be easily achievable.
Another stock that's on a tear today is Eros. Watch out for that. It's partnered with Royal Challengers Bangalore as the title sponsor.
Watch out for Shree Cements as CLSA believes that they've upgraded the stock to a buy from outperform. The target though has been cut to 20,100 from 22,000. They say volume growth is sustainable over the next 2 years and EBITDA is seen at a 25% CAGR.
Also in focus is Strides. The Strides sequent to turn ex-state today. The company is to turn ex-state for a composite scheme. Watch out for that one.
Under pressure in trade is Sona Koyo as the promoter. J Tech will be selling about 35 lakh shares. The stake sale is via an OFS with a floor price at 85 rupees a share. Okay, those are your top stories, and here's what's lined up on the show. Banking all the way. Should you be banking on this stocks? Well, we'll find out. Axis Bank will be discussed. We've got queries on Yes Bank, ICICI Bank, Federal Bank, Kotak Bank and HDFC Bank. But first things first, speaking of the banking sector that's going to be in focus, it's views on what exactly brokerages made of yesterday's RBI policy. Okay. But before we do that, let's focus in on, let's bring on board our guest, shall we? Krishnan ASV is lead analyst banking and financial services at SBI Cap Securities. He will be answering all of the queries from the banking space and also on the technicals. As always, right now we have with us Kunal Bothra. Thanks so much for joining in. Krishna, I want to get to you first. Let's just talk about the overall sector outlook. And if one sector has gotten off to a terrible start in 2018, it would have to be the banking space, you know. Mired by controversy, there's only been a spate of bad news with respect to the scams. Lots of question marks arise as to how this could be prevented. But what exactly have you made of the kind of news flow that we've seen? And in light of this, what should investors do in order to avoid getting their fingers burnt?
Yeah, hi. Thanks for having me on your show. Very clearly, as we stepped into CY18, we were beginning to turn constructive on corporate lenders. We've had a terrible FY17 and a terrible FY18 in terms of, you know, asset quality, slippages. The pace of slippages has accelerated significantly, and a lot of that is likely to be put behind by the end of the March 2018 numbers, especially with the RBI circular now having come through in the middle of Feb. It's very much possible that banks are likely to use the March 2018 quarter to get rid of a lot of the toxic assets in terms of recognition. What lies ahead in FY19 is obviously catalyst, upside catalyst as far as recoveries are concerned. There are large cases, about 40 odd cases, that are awaiting resolution over the next 6 months, and obviously this did not exist in FY18. So to that extent, there are earnings catalysts in FY19 for the banking sector, especially for corporate lenders, and that's how we would look at all this cleanup exercise. I mean, number one, on the one hand, you have a pool of assets that is awaiting recognition, but that's reducing by the quarter. After the March 2018 quarter, hopefully the residual stress will be significantly lower than what we saw in FY18. More importantly, there will be recoveries that will begin to kick in FY19, and that should be a big catalyst, upside catalyst for earnings.
Well, here's hoping for that to happen. Let's also address some important flashes right now on the screen. The NCLAT, there's an update rather on RCom, and RCom The SC has directed RCOM at this point of time with RCOM has rather moved to NCLAT for vacation of stay on tower monetization. That's the big update coming as far as RCOM is concerned. We're seeing the stock price also, move quite a bit today in trade, Avan.
Yeah, that is definitely quite a breather that we're seeing for Reliance Communication, as the Supreme Court allowed the spectrum and realty sale to Jio, and that will help pay the company's debt. But the Apex Court had also asked Reliance Communication to approach the NCLAT for seeking the stay on the order that bars RCOM's subsidiary Reliance Infra from selling the tower assets to Rel Jio. What we're picking up right now is that RCOM has moved the NCLAT for vacation of the stay order on tower monetization, and they have directed that the matter will be heard today. Remember, the Supreme Court has already vacated the stay on the sale of spectrum, MNCs as well as real estate. The stock price has come off a bit, 23.6 on RCOM. Keep you up to speed as and when we get more details on the same. Kunal Bothra with us on the show as well. And Kunal, you've got 3 buy recommendations in the first stocks from the banking space.
Yes, Avan, banking special day today. And the first one is Karnataka Bank, which I'm recommending to buy. I sense that on the daily charts, it's now on the verge of a big breakout. The volume patterns, the more important segment is the open interest shape up which is happening since last 3-4 days for many of these banks. I think is now showing signs that you could see some bit of round of short covering as well as long build up happening into individual names. Karnataka Bank should be one of them. Suggesting a buy with target of at least 130, stop loss at 120. The second is a pharma stock, and earlier in the day I had mentioned Lupin as a buy. Now even Aurobindo Pharma, I think it's looking extremely strong. The stock made a very good comeback in 3-4 trading sessions back, and post that it's seeing a follow through of momentum. So that's a extremely positive sign, and heartening to see that this should be a change of trend for Aurobindo Pharma and many of these other pharma names as well. Aurobindo Pharma is buy with targets of 655, stop loss 587. And the third stock is Kaveri Seeds. Even on the daily charts, the stock is it's a high beta name, but it's showing signs of a stable uptrend at current levels of 510 odd. I believe Kaveri Seeds could be bought into with a target of 550, stop loss 495.
Okay, those are some of the top recommendations that Kunal is flagging off, but let's get straight to the queries that you sent in the banking space. First up, we have an email query that has been sent in to us by Mr. C.L. Suri. He says that he's got 50 shares of Axis Bank. His price point is 500 rupees, and now he would like to know what's the view when it comes to the long term as well as the short term outlook. Well, let's talk a little bit about the fundamentals of Axis Bank, and some of the private sector banks have also come under pressure with the bears mauling some of these counters, Axis Bank included. But what would be the long-term fundamental story? Would it still remain a safe bet to be in at a price of 496? Krishna, let's understand how exactly you're looking at the stock from a fundamental perspective. Our viewer here has picked it up at 500 rupees. Does it still remain a steady stock in the portfolio?
Yeah, I mean, I believe the Q4 numbers that will be reported sometime end April should be a very good time to look forward to FY19. And as I said, there are most of these corporate lenders, there are upside catalysts to their earnings. Axis Bank is no exception. Given that FY18 you would have deflated your earnings a fair bit, I think the earnings growth will optically look extremely strong. We have a buy recommendation. We have a buy on Axis. We see an over 50% upside there, and we believe that will be largely driven by earnings triggers. So you should stay invested in the stock at these levels. Very obviously, yes.
Okay, that's the view coming in on Axis Bank as far as the fundamentals go. Kunal, come in on Axis then. What's the kind of moves are you charting for Axis Bank? Because in the last 1 month, we've seen the stock get a fair amount of beating following a negative news flow. Where do you see it go from the current levels?
Yes, Karna, I think it's retraced almost 20% exactly from its 620, 625 tops 4 months back, 3-4 months back. And now I think for large cap stock, for a banking stock which is which showed extremely positive signs just 3-4 months back, and the stock now coming back to its key support levels just from this 500 mark, your buy price is also very attractive because it's at the lower end of the curve, at least in terms of short-term patterns. I believe you should hold on to Axis Bank. Maybe the stock, gains back, stability at current levels and reverses. You could see a scale back and, maybe an attempt towards breaking that 620 mark once again. So I would recommend a hold on Axis Bank from current levels.
Okay, that's the outlook coming in on Axis Bank. So from a fundamental as well as a technical standpoint, you can look to stay invested in this stock. Yes Bank is the next stock that we're discussing, and Amber has reached out to us on Twitter. He's bought 44 shares of Yes Bank at a price of 335 rupees. Now he wants to know, does it make sense to stay invested or should he book out of this one? Well, it's been a fairly choppy stock in the long haul, but what is the expectation, Krishna, when it comes to the earnings from Yes Bank? Do you believe that we could see, some sort of an improvement in the overall asset quality? Is this going to be a strong bet within the banking space?
So in the very near term, I would believe Yes Bank could actually outperform some of its peers, largely because some of the distractions that exist for the other private sector corporate lenders may not exist for Yes Bank. And generally, we believe in the medium term, our thesis around Yes Bank has been built around relatively lower loss given defaults. Very strong superior covenant management, which drives those lower loss given defaults. So we don't see any risks to that thesis. We do believe that over the next 3 months, as this quarter pans out, we do believe that Yes Bank is probably likely to remain an outperformer in the very near term. But over the medium term as well, we believe there are very strong reasons to own Yes Bank.
Okay, so you see some medium concerns come in on Yes Bank, but for a short-term point of view, the prospects look fairly strong. Kunal, come in on Yes Bank. Then our viewer here is incurring some losses at this point of time, but do you see things change going ahead?
I think it should change, for good, at least for the near term to medium term for Yes Bank. It's been one of the few names, solid names which has shown strong price performances. I think in every part of the last 4-5 years of this strong uptrend. So volatile phase, the stock goes into sideways, and when the market overall structurally goes into a strong uptrend, Yes Bank tends to outperform many of these other private sector banks. So yes, I believe it's a strong stock in terms of price performance. Maybe the stock is consolidating as of now, and it should pick up steam at least in the very near term to medium term. So hold is what I would recommend on Yes Bank.
Okay, so consensus hold call coming in on Yes Bank. Now let's talk about one of the most interesting queries that we have on ICICI Bank. Of course, not just our viewer who is Rajiv Chandar, who's written to us from Mumbai, wants to know, but a lot of our viewers out there would also like to know what the pattern looks like for ICICI Bank, what the fundamentals also speak about it. Krishnan, coming to you on ICICI Bank, Rajiv has bought 1835 shares of the bank at 315 rupees a piece. He is looking at it from the long-term perspective and wants to know whether he should hold on to it for some time, or is it time to sell it off and exit the counter?
So again, I think the early part of FY19 will probably be a challenge for ICICI Bank, just like it would be for an Axis Bank as well. So I think it will probably test your patience a bit. And there are other headwinds around the stock which are probably not related to fundamentals very directly either. But having said that, I do believe that FY19 earnings, that thesis around FY19 earnings for corporate lenders should stick as much for ICICI Bank as it would stick for other private sector corporate lenders. But I do believe the next 3 months could see a fair amount of headwinds there.
Yeah, it's going to be a bit challenging is what Krishna is saying for the stock price from a fundamental standpoint. This one too mired by quite a bit of controversy. 280 is where it's currently at, and let's map the 3-month chart. It's been on a bit of a downward trajectory to say the least, Kunal, but do you concur? Is the choppiness here to stay?
I think it should continue to stay till the time the stock is in the thick of news, which it's been going on since last few days. But if you sort of isolate the news and just look at pure price patterns, I think at 280 to 270 where the stock traded, I think last week odd, I think it's a fairly decent enough support zone for ICICI Bank. The open interest built up in terms of last 3-4 days of heightened activity. and the way the the monthly charts are shaping up for ICICI Bank, I believe that this fall seems to be getting arrested. There is a fresh amount of demand which is emerging at these levels of 270 odd. So I think that should itself play as a good support for the near-term prospects for ICICI Bank stock price. I would recommend a hold on the same.
Okay, so a hold call coming in on ICICI Bank from both our experts at this point of time. Let's also focus in on the RBI policy meet and the outcome that we saw yesterday during towards the end of the trading session. Poonam is standing by to give us a sense of what brokerages are making of it and how they are reacting to it. Poonam, over to you.
Thanks. Before I move on to the brokerages, let's look at the bond yields. Yields have picked up slightly again after easing close to around 18 odd bips at a 16-week low. Bond yields did hit, and that is, since you were discussing the banking sector, that's again slightly positive, at least from a PSU bank perspective in terms of the MTM losses. But having said that, brokerages, most of them do expect a prolonged pause in 2018. It's only BofA wherein they are maintaining that they do see a 25 bips rate cut in August. Morgan Stanley sees a rate hike in December, but CLSA, UBS, Macquarie as well as Nomura all state that there is a likelihood that we should be seeing RBI to maintain a pause. Having said that, of course, the RBI policy did leave some puzzled, some and most, I would say, positively surprised. CLSA does state that if at all, CLSA does state that inflation is too high in order to allow rates to be cut going ahead, and the growth is too low for the rates to be increased. DBS also states that April's monetary policy tone was fairly less cautious than what was indicated in the MPC minutes. I guess that is a most important fundamental shift. They're also saying that they do not see CPI to test the past higher band of 5 to 6% levels in a sustained fashion. In fact, they're also stating that there's limited room for further decline in bond yield. They're seeing the bond yield to be fairly range bound. Morgan Stanley sees possibility of rate hike in December. HDFC Bank puts it very nicely.
Okay, Poonam, I think we've got her on a bad audio. We'll get back to her later at some point of time. But it's time to get into a short commercial break. We have lots more lined up over the next 30 minutes, more viewer queries as far as the banking sector goes, of course, since it is our banking special. So stay tuned, more coming up, Federal Bank, Kotak Bank and viewer queries on HDFC Bank as well on the other side of this break.
Welcome back. Still tuned into Buy Now, Sell Now. It's our banking sector special, and we're dissecting all of your questions and queries on the banking space. We have Krishnan ASV, lead analyst banking and financial services at SBI Cap Securities, with us on the show as well. But let's take a little bit of a detour, move away from banks and focus in on pharma, because yet again it's a newsmaker in trade. Lupin in focus, as it's been a US FDA boost coming in for the company. We've got Pankaj joining in to run us through the details of the same. Run us through, Pankaj, which exactly is the facility that has got the EIR from the US FDA and how the stock is reacting?
So, Avan, if you just look at the stock, I think the stock is up around 4% at this point of time. When the news flow came, it was up about 5-6%. So 1% of the day's high, but 4% in the green. Now, if I come down and look at the news flow which has come in, so US FDA has issued a EIR to Pithampur unit. It is the unit 1 that we are talking about. Now, unit 1 and unit 2 are different. Unit 2 is where there were problem areas, where there were a lot of applications that they have, and where some adverse impact or some adverse observations were issued. Unit 1, of course, was inspected back in July 2017. It did not have any major observations. In fact, the street was not even factoring in that anything adverse would come out of there. So it comes in largely in terms of expectation. Also, along with this, the MD Nilesh Gupta has spoken, and he has said that they adhere to very high standards of global manufacturing practices, and they are constantly updating to go ahead and adhere to any further changes that happen. It shows their commitment to go ahead and meet the global standards. So that probably reassures. It's a sentiment booster. The stock is up 4%.
Pankaj, thanks much for all of those updates as far as Lupin goes and why exactly the stock is really buzzing away in trade. But let's get right on with our banking sector special right here on Buy Now, Sell Now. We're also being joined by Manas Jaiswal right now on the show. Manas, hi, good morning. We're seeing Nifty trying really hard to break above the break-even point, and we still are pretty much in the red, down by about 20 odd points. What kind of a move do you project for the Nifty going ahead?
See, I think after yesterday's move, today is a day of consolidation because Nifty is continuously trading above the resistance of 10,250, and the possibility is very high that you may see some more upside in Nifty, and Nifty can come in the range of 10,400 to 10,417 because 10,417 is 38.20% retracement level of its entire fall. So I think for 100 rupees move, definitely you can create some long position. Your stop loss should be below 10,250 and your target would be around 10,400. And that is why I have three buy recommendations right now. First is NIT Tech because most of the mid cap IT stocks are looking strong on the charts. NIT Tech corrected almost 150 rupees recently, but the stock took support near to 50-day moving average. And today it has already broken the resistance of 900 on the daily charts with great volumes. So I think the stock can test its previous high. So at least you can set the target of around 940. Take a long position here. Keep your stop loss below 894. Second is a buy on Jubilant Food where the trend is clearly positive. Stock is making higher tops and higher bottoms. Yes, stock was facing some resistance near to 2350, but today it has already broken that resistance. So I think that the rally will continue and Jubilant Food can test 2450 soon. So take a long position here. Keep your stop loss below 2350. And last one is a buy call on MRPL. There is some sign of reversal on the charts because the stock was making lower tops and lower bottoms. But now, since stock has broken the resistance of 112, that is a confirmation of higher tops and higher bottoms. And on the weekly chart, it is making a morning star pattern. So I think here you can play for a bounce back. The target would be around 120. Stop loss should be 112.
Okay, those are the top recommendations based on the technical charts. NIT Tech, Jubilant Foodworks and MRPL all getting a thumbs up. But let's understand some of the top wealth creation ideas within the banking space as a whole. And right now, there's a lot of trepidation and caution when it comes to approaching these stocks. Krishnan, is there any sort of demarcation that you have that we should focus solely on the private banks? Or, one should be looking at an opportunity now to invest into some of the beaten down PSBs. What are your top wealth creation ideas?
So, very clearly private sector banks over PSU banks in this environment. The number of investable names within the PSU banking universe has shrunk over the past 6 months, over the past 12 months. And unfortunately, with a large number of PSU banks already under the PCA framework, plus adverse news flow from the Punjab National Bank fraud fiasco, there are ripple effects for the rest of the PSU banks as well. So I think the investable names are very few within the PSU banking universe. Our parent entity being one of them, we will not comment specifically on State Bank of India, but I would imagine that that number of PSU banks that investors tend to find investable has now shrunk to maybe 4 or 5 names, and hence there is a larger pool that you can identify and probably select from within the private sector banking universe, which is where we essentially are saying that we see earnings turnaround and earnings revival as a catalyst that will probably play out for corporate lenders, and obviously we do have a pecking order there. Yeah.
Okay, that's the view coming in on some top wealth creation ideas. So the top bets from SBI Cap is Yes Bank, Axis Bank, HDFC Bank and Federal Bank, and a clear bias toward the private sector banks at a time like this. Let's just take a bit of a detour and address some news coming in. The Delhi High Court has issued a notice to the investigating agency ED on a plea of Gitanjali Gems seeking quashing of the money laundering proceeds against them. Let's bring on board Meenakshi Bhanja from Times now. She joins in with an update. What exactly is the latest that you're picking up with respect to Gitanjali Gems over the ED raids?
This is going to be interesting going forward because remember, this is Gitanjali Gems before the Honorable Delhi High Court saying that the investigating agencies have gone ahead and violated their fundamental rights under Article 14, 19 and 21. And therefore, the ED also should be subjected to judicial scrutiny. There should be responses should be sought from them about the manner in which the investigating agency has proceeded against Gitanjali Gems. It is arbitrary, it is non-transparent, and there has been a considerable amount of high-handedness which purportedly that ED has indulged in. This is what Gitanjali James is telling the Delhi High Court. And as we've seen in the past, there are instances when corporates, when they are subjected to this form of aggressive investigation, do often try to knock on the doors of the courts and make a case out for themselves, as is Gitanjali James. And this particular instance, their plea has been admitted as we speak. Notices have been issued to the Enforcement Directorate, and they're supposed to file their responses or formally reply to the Honorable Delhi High Court till the 11th of April.
Meenakshi, we'll leave it at that. Thanks a lot for giving us those quick and important updates as far as Gitanjali's plea to High Court goes. They moved to HC against the ED seizure. Gitanjali James, the High Court in turn had issued a notice to ED. At this point of time, we yet to hear from ED how they will respond to this particular plea, wherein Gitanjali has accused ED and moved the Delhi High Court against that. Let's move right on and address some more viewer queries at this point of time. Shravan Kumar got in touch with us via Involve from Ranchi all the way. He's bought 100 shares of Federal Bank at a price point of 115, looking at a time horizon for 1 year. Krishnan, come in on Federal Bank. How do you view this bank as far as the fundamental goes? And the entry point has been 115 rupees, so clearly he's making some losses on this counter presently. But do you see some positive moves ahead going forward?
We've been constructive on Federal Bank for a while now. We like the way the franchise is shaping up. We do believe it's a longer term wealth creation idea that we have been showcasing to investors, institutional investors for a fairly long period of time, and we are extremely constructive in how we view the thesis. However, having said that, for investors who have less than a year investment horizon, it's very difficult for us to be able to time that. I mean, your viewer seems to be sitting on a fairly hefty loss at this stage. We have a buy rating on Federal Bank. We see near 40-45% upside from current levels, and we continue to hold out on the thesis. We do believe it's a longer term play. It's something that we are unable to time within a horizon of 1 year, but we do believe it's a very strong franchise in the making.
Okay, that's Federal Bank for you based on the overall fundamental setup. And remember, it was one of the wealth creation recommendations as well, Krishnan flagged off. So a long-term play and a safe bet within the portfolio. Manas, you seem to have a contra view on this one. What's the outlook on Federal Bank? Do you believe that the choppiness will continue on the chart so that it could and that it will continue to remain around sub the 100 mark?
Technically, I don't find any reason to be there in Federal Bank, because here the trend is negative. The stock is making lower tops or lower bottoms. I understand the stock has some support near to 88 rupees or 87 rupees, but the pattern is weak. I think after some recovery, because we have seen a sharp crack, so you can see a recovery. So after some recovery, you may see some selling pressure on higher levels in Federal Bank. So I think on rallies near to 95 rupees or 100 rupees, one should exit from the long position, and you should invest this money in some strong banks like Kotak Bank or maybe IndusInd Bank, because these two banks have potential to give around 15 to 20% up move from current levels in next 12 to 15 months time. So I think on rallies you should exit from Federal Bank and invest this money in Kotak Bank or IndusInd Bank.
Okay, that's the view coming in on Federal Bank. Manas would recommend selling it off on a rally as far as the stock goes, and look at Kotak Bank or IndusInd Bank as an alternative if one wishes to invest in the private banking space. And on that note, let's slip into another short break, but do remember our banking sector special is on. We'll be back with more on where to invest and how to actually approach this particular sector in the present market scenario. Stay tuned, we'll be back soon.
Hi there, welcome back. This is Buy Now, Sell Now, and we're talking banks today on the show. But let's just quickly check in on the equity markets as well. We opened around the 10,320 mark, and as we speak, we've tapered off a little bit, so the advanced decline ratio right now is just about even Steven. It's tempered for the broader end of the market as well. Airtel has had a disastrous week, and today as well is the top drag on the index. Infosys is looking muted. L&T, IndusInd Bank, Axis, Wipro, as well as Ultratech Cement and UPL continue to languish in trade today. But there's some stocks that are lighting up the screen, so just want to flag up from the Nifty 500, which are the top gainers in trade today. Soba clearly reacting well to those sales numbers, so currently up a good 8.5%. Checking on mid-cap IT counter Emphasis, which is doing quite well right now. Jaicorp is pretty upbeat. MMTC is seeing some traction. Ditto is the case with Trent. Hindustan Copper and Eros International is active on the back of fundamental news. And then there's some of the mid-cap pharma names. You've got Fortis Healthcare, which is looking smart. Spark, which is in the green. Something like a Lupin from the frontliners is active in trade right now. Strides as well included. But let's get right back to those viewer queries. And Kotak Bank is the next stock that's in focus. Gaurav Mehta has reached out to us from Ahmedabad. He's holding 20 shares of Kotak Bank. His price point, 1,061. Now, he's fairly categorical. He wants to know the view, but only for the short-term time horizon. So, Krishnan, if you could just, don the hat of a trader, if you will, for a little while and give us a view as to what the outlook is in the near term on Kotak Bank. A, would you think that he should stay invested but perhaps stretch his time horizon since he's making some good money? Or do you think that this is a play for the short term and hence it's a hold?
It remains a very strong franchise, to be honest. We have a sell recommendation. This acquisition price is probably a little over what we think is fair value. But having said that, it remains a very strong franchise. It remains a stock that investors do tend to hide in whenever there is flight to safety. And as I said, I think the next 3 months will probably bring that environment once in a while. So this, along with HDFC Bank, will probably be the bellwethers for the sector, so to speak.
Okay, so you believe that it's a hold in the portfolio for the short term or not?
We have a sell. We wouldn't be able to distinguish.
Understood. Yeah, understood. Okay, I hope you've taken note of that advice. But what about the chart patterns, and does it merit a keep in your portfolio or not? Let's understand that as well. Kotak Bank on the charts, Manas. Do you believe that the level that the stock is currently trading at is likely to be maintained? It's not been a bad month or so for the stock as well.
See, in the all time frame, the stock is definitely looking very strong because stock is making higher tops and higher bottoms. Just yesterday, stock has given a breakout of a triangular pattern with decent volumes. And now I think I am expecting the target of around 1200 or maybe 1225 for next 2 to 3 weeks time. So definitely this is a hold for short term. I think one should keep the strict stop loss below 1050. And if you want to hold it little bit long term, say around 12 to 15 months time, then definitely you can expect the target of around 1350 or maybe 1400 in Kotak Bank. So I'm quite bullish on Kotak Bank. So hold is a call, and the stop loss should be 1050 for short term.
Right, so that's the call coming in on Kotak Bank. Let's move right on to the next query then. Uma Sharma from Agra has written to us. She's bought 50 shares of HDFC Bank at 1425 rupees a piece, and her time horizon is 2 to 3 years. Krishnan, what do you think about HDFC Bank? It's been an immense wealth creator for long-term investors, but from a 2 to 3 years sort of a point of view, do you see it yielding more gains for our viewer here?
Yeah, absolutely. I think it's a, as I said, it's a no-brainer. If you were to own only one stock amongst Indian banks, it would always start and end with HDFC Bank. It remains the strongest franchise in the Indian banking industry, and I do believe, it's an all-season play. So to that extent, there are market share gains here. There are obviously PSU banks that are distracted, and HDFC Bank has almost all the strengths at play right now in order to keep gaining market share. And those will be high quality market share gains. They do not compromise on risks. They do not risk management. So to that extent, we have a buy recommendation. We have remained constructive on HDFC Bank.
Okay, it's an all-season play, so definitely this one gets a thumbs up based on the overall fundamentals. Look to keep it in your portfolio. You've got a nice long-time horizon, Uma, as well. So I think you will derive comfort from the fact that Krishnan said that it's one of his wealth creation picks, and he believes that there's a lot of potential as well on the upside. It's also a buy recommendation at the current levels, by the way, for those who are looking to invest. Manas, you know, so far so good when it comes to HDFC Bank. Steady on the earnings front, chart patterns okay, valuations also seem fairly justified. A marquee name within the banking space that has managed to remain unscathed as well with all of the news that's been coming in. Do the technical charts mirror the fundamentals?
See, yes, we have seen almost 1,000 points rally in last 2 years in HDFC Bank. But now the negative point is on the monthly chart, HDFC Bank made a dark cloud cover pattern 2 months back, which is a sign of reversal. However, stock has a lot of support near to its 200-day moving average, which is placed near to 1800. So I think he can hold it, but keep the strict stop loss below 1800, because if it breaks 1800, then definitely it can correct its entire rally from 900 to 2000 rupees, and in that case, the stock can go down and test 1500 or maybe 1550. So I think till now, definitely he can hold it, but keep the strict stop loss below 1800. The trend will turn bullish only if it breaks 2000 now. If it breaks 2000, then definitely you can see almost 300 to 350 points rally. So hold is a call, but keep the stick stop loss below 1800.
So clearly a consensus hold call coming in on HDFC Bank, really a no-brainer. It's been one of the biggest multipliers as far as large cap names go. With that, we'll slip into another short break, but stay tuned. There's more coming up on the other side. Good to have you back on Buy Now, Sell Now. Let's now talk a bit about what the brokerages are keeping their eye on. They have a buy call to start with on Canara Bank with a target price of 298 and stop loss at 266. Another buy call coming in from Motilal Oswal on NIIT Tech. They have a target price of 960 with a stop loss at 892. IIFL in the meantime has a sell stance on Bharti Airtel. They have a target at 375, stop loss at 391 rupees.
Okay, let's connect with Renisha Chenani to talk a little bit about some top commodity trading strategies in trade today. Welcome to the show, Renisha. Crude oil prices falling along with the equities on account of the latest developments by Donald Trump. What is your outlook?
Hi, good morning. See, as market sentiment is towards, risk off tone, so we have seen a sell-off across all asset classes, even in commodities, crude oil, base metals, precious metals, all have been seen sell-off, and only one asset class that is rising, that is dollar index. And as yesterday, again, we saw, trade war escalating and Mr. Donald Trump coming up with, again, new $100 billion dollars of tariffs. So this is hurting the market sentiment, and overall, the hedge fund managers are not ready to take buy positions, and we have seen that they are all short in all the commodities. So net positions are still short. So crude oil, I still expect we can see this sell-off continuing towards $61, $62. I would recommend to sell crude at current levels and on rice around 41.20 and 4100. I see at MCX prices can come down to 4050 kind of levels.
Thanks, Renisha. I'm afraid that's all the time we have on the show, so we'll have to let you go on that note. With that, it's a complete wrap on this leg of Buy Now, Sell Now, our banking sector special. I hope you enjoyed and we were able to answer all your stock queries. We'll call it a day then, and coming up next on the other side, we've got Market Sense. Don't go anywhere.